Hi everyone, we are starting up another discussion today. The standard that we are going to discuss today is LKAS 20. This is accounting for accounting for government grants and disclosure of government assistance. And you might think, wow, this is going to be bit of a lengthy discussions, lengthy standard. No, the name of the standard looks little lengthy and daunting, but the contents are very simple, and it is important from the examiner's viewpoint though. Now, we need to break the name of the standard into two initially: accounting for government grants and disclosure of government assistance. So, within the name of the standard there are two components: government grants and government assistance. So, what is required for government grants? So, what is required for the government grants is the accounting part of it, accounting for government grants, but for the government assistance, what is required is not the accounting but the disclosures. So, it is extremely important in the process of our discussions of LKAS 20 to identify what government grants are and to identify what government assistance should be, and to distinguish government grants from the government assistance, and then only you can do whatever the accounting that is required for the government grants, and you can do whatever that is required to do for the government assistance. And this word government is repeated within this name. You also should know what the government should be, and that may be kind of a term or a name that most of us do not like to hear the most, but still we need to discuss it. So, we have different governments. It is the central government, it can be some other governments, but remember, it is not the petticoat government. The petticoat government is in your family. We will define what the government is as per the standard. We will define what grants are as per the standard. We will define what assistance should be as per the standard. And then let us see the required accounting for government grants and the required disclosures for government assistance, and this is how the flow of our discussion should be from the beginning to the end, and that is how it cascades down from the beginning to the end, and this is an important lesson, and you need to keep listening from the beginning to the end. Now, as you start watching this video, I want you to keep your standard book close to you, because I am referring to some definitions of the standard. I am referring to some paragraph numbers also in the standard. So, as and when the requirements arise, I want you to go through some definitions and some accounting prescriptions in the standard. More importantly, since your exam is an open book exam, and you need to know how to optimize the use of your standard book at the exam hall. So, right now, if you get familiar yourself with the use of the standard book, you know where the standard is, you know where the definitions are, you know where the accounting prescriptions are, you know where the disclosures relating to government assistance should be, and it is very easy and convenient at the exam because you know everything and you know where the stuff is in the standard book. We will first look at the definitions. In the definitions are there the definitions of government, the definitions of government assistance, the definitions of government grants, the definitions of grants related to assets, the definitions of grants related to income, forgivable loans and fair value. But come on, I will not explain the concept of fair value because we have repetitively explained that concept almost everywhere, and also this concept of fair value has got defined in almost every accounting standards. Hardly do we get an accounting standards where the fair value is not spoken about. So, just leave it aside for the moment and we will discuss the other important concepts which are unique in the discussion of LKAS 20. Now, just to give you a small overview of the standard from the beginning, just in a small snapshot, in a small nutshell, how this is looking, what it is looking like, and how our discussion will be structured. So, let me get you to see just a small overview of LKAS 20 and then we will start discussing from the beginning to the end. So, this is our flow of discussion of LKAS 20. We are starting from the government assistance, and then we will proceed to discuss the government grants. The grants will be of two categories basically, asset related government grants and income related government grants. And when it comes to asset related government grants, LKAS 20 proposes two ways of accounting. We can do the accounting either under the capital approach or under revenue approach, and there are purposes for setting up or adopting the capital approach or revenue approach. What is the purpose as per the standard? Capital approach can be considered to be preferable, or if one decides to apply or adopt the capital approach to recognize government grants, the intentions would have been to recognize the government grants outside the profit and loss, and we do not want the government grant to be in the profit and loss, we want that to be outside the profit and loss. So, that will be warranted only if you adopt the capital approach. Revenue approach is like the other way. If somebody wants the government grant to be right within the profit and loss, then we apply or we adopt the revenue approach. You all do not know what asset related government grants are, and we will start discussing. I will be started to discuss from here. The second category of the grant is income related government grants, and that also can be presented in the financial statements in two methods. Either the government grant is recognized as a separate other income item in the profit and loss, or it can be recognized to the financial statements as a deduction from the related cost. And then if you adopt the revenue approach for asset related government grants, again we have two methods of presenting them in the financial statements. Either you can recognize them first into deferred revenue, which can be released subsequently to profit and loss on a particular systematic method, or it can be presented in the financial statements as a deduction from the cost of the particular asset concerned. Other than this, you also need to learn how the repayment of government grants will be accounted in the financial statements. That is all about it. And it is so much for the overview of LKAS 20, and this is what we are going to discuss through and through from the beginning to the end. And let us see what government assistance is in the first place, and then we will embark on the other related areas. Government assistance. So, what is the government supposed to do? Is the government supposed to conduct and carry out businesses, and that is not their business? So, what should be the business of the government? To mind their own business, yes. And what should be their business? The business of the government is not to run the business, but their business should be should be to be the facilitator for the business, for the people who run businesses. Now, the government should not spearhead to be an entrepreneur to run businesses, but they should be the policy makers, or they should be the facilitator, or they should be the infrastructure providers to the business community who run the business to push this country forward. And if the government forget about that part, and if the government starts running the businesses, then the business community will get cornered, and then the business will forget about their role, and the country will not be moving forward because the government is doing not what they are supposed to do. So, the government should be kept themselves away from running the business. Instead, they need to provide the required infrastructures, the required support services to the business community for them to run their businesses. Now, we know for any party to run a business, you need to get the support and the assistance and the back from the government. The government will be coming forward to support the business community in numerous ways. What are they doing? Sometimes the government will decide to additional tariff or taxes for the purpose of discouraging imports and to boost up the local manufacturing, to boost up the local businesses. And sometimes the government will decide to provide the required infrastructures to the business community as a whole, by and large. Or the government will decide to provide the required technical support to the business community, and if the government feels that the business community does not have or they lack the required technical knowledge. Or the government will decide to provide the required initial capital or financial resources where required if the government feels that the business community lacks the required financial resources for them to continue in their businesses. Or sometimes the government will come forward and spearhead to propagate the businesses, local businesses around the world just for the purpose of promoting the export sales of the local business community. So, likewise, you can think as many examples as you need for the methods in which the government is coming forward to help the business community, supports them in numerous ways. Can we call all of them the government assistance? Not at all. Why? To identify and to pick the government assistance from all the examples that I cited right now, you need to look at the definitions of government assistance in LKAS 20. So, let us see how LKAS 20 defines government assistance. Can I do a small thing before that? Can I explain the definition of government first and foremost, this particular part, and then you know what it is from the perspective of LKAS 20. The government refers to government agencies and similar bodies, whether local, national or international. The government refers to government or government agencies. Now, in Sri Lanka, we have different governments. It is not the central government and the petticoat government. The petticoat government is in your family and the house, and we will refer to the government itself, that central government headed by the president and the prime minister and the cabinet ministers. In addition to that, there will be related or connected organizations to the government like the ministry. So, it can be sometimes the provincial council or maybe sometimes urban council. So, within the definitions and the context of the government, we have to include all of them. What is the standard will be used for should be to learn how the accounting prescription should be when a business or business enterprise receives something from the government. Just imagine you being a businessman who is desperately looking for a land on Pasikuda beach to put up a hotel project, and you know on Pasikuda beach the hotels have been mushrooming almost everywhere, and it is absolutely hard as finding good girls sometimes to find a land on Pasikuda beach, and nobody can do it. So the government is coming forward to this business enterprise and says, look here, we have a 10-acre land on Pasikuda beach and we don't mind giving that to you all, and you can start your constructions hotel project, but there are certain conditions. So that is an assistance from the government, and that falls within the definitions of assistance within the LKAS 20 scope, and you need to know how the accounting should be for that assistance. The government should be the central government, headed by the president and then the prime minister and the cabinet, and the government agencies like the ministries and so on and so forth, and that is what LKAS 20 means by the government. And then we will come back to this government assistance. The government assistance concept in the standard has been bit of a lengthy definitions, and that is bit of a heavy paragraph, and let me go through, and you need to keep underlining all what you think is important. Almost every single word and a full stop and a comma in the definitions carries a meaning. Government assistance is action by government designed to provide an economic benefit specific to an entity or range of entities qualifying under certain criteria. Government assistance for the purpose of this standard does not include benefits provided only indirectly through actions affecting general trading conditions, such as the provision of infrastructure in development areas or the impositions of trading constraints on competitors. So it is bit of a lengthy one, looks little daunting. Let us take one by one and see what each and every single word means. Right. So government assistance is an action by the government. It is an action by the government, true enough. That is designed in order to provide economic benefits to a specific entity or to a specific range of entities on qualifying range of entities qualifying certain criteria. Right. Now, what are the important words that need to be necessarily included in the definition? It has to be an action by the government. If you get something free from the government, only you should apply LKAS 20. And without you earning something by yourself, if you just get something from someone who is not the government, say you win a lottery and you get about 10 million rupees from the lottery, and that will not be accounted under LKAS 20 because it is not from the government, it is something else. And if you get another massive charity from another international organizations, that does not come under the scope of LKAS 20 because it is not from the government, maybe from someone else. And if you start kneeling on your foot, start praying for the Lord without running the business, and if you are such superstitious to believe in the God without you believing in yourself, if you start kneeling on your feet and start praying for the Lord, asking for something, and if you get something from the Lord, and that again does not come under or come within the scope of LKAS 20, it is outside the scope of LKAS 20. Why? What you got is not from the government, what you got is from someone else. So make sure it has to be something we received either from the government or from the government agencies, and then only you can apply LKAS 20 for the accounting part of it. Action by the government, it is not an action by the God, it is not an action by another international community, it is not an action by the nature, it is not an action by luck. It's not an action by your destiny, it has to be an action by the government to provide economic benefits. And this is something which is very familiar with us. Economic benefit is not such a technical term that we need to learn separately. Economic benefits are in simple terms which you and I understand the future expected cash flows. So, the government is deciding or taking some actions to provide economic benefits. What do you mean by economic benefits? To provide some cash flows to a specific entity, or to a specific range of entities. If the government is deciding, if the government is taking some actions to provide economic benefits to, the government is taking some actions in a way that an entity will be able to receive a cash flow in the future, or if the government is taking an action in a way that specifically a range of entities will be able to generate an economic or will be able to generate cash flows in the future, that is what the government assistance should be considered to be. Now, let me take APLC. They are in the hospitality industry and they have couple of hotels all over the country. Also, they want to put up another hotel on Pasikuda beach, and they are desperately looking for a land on Pasikuda beach to start the construction of another 7-star category hotel. But as I said before, almost everywhere the hotels are mushrooming. So, this entity is almost about to give up their idea of operating a hotel on Pasikuda beach, and the government is coming forward to help this guy. The government says, look, we have a 10-acre land on Pasikuda beach and we are alright and we don't mind giving you that so that you can start your hotel project, and the land market value is say 500 million rupees, a massive property. So, it is an action by the government to provide economic benefits. Economic benefits need not to be necessarily a cash inflow to the entity from an outside source. An economic benefit can be sometimes a cost saving to the entity. Now, this is like the government first giving 500 million rupees and giving that 500 million rupees back to the government and buying the land. On the other hand, this entity need not to pay 500 million rupees in order to purchase the property, because it is given freely to the entity so that they can save 500 million rupees right within the business, so that they can use that 500 million rupees for some other purpose. So, that is an action by the government to create an economic benefit of 500 million rupees to the entity. And the economic benefits are not to the general public by and large. The economic benefits are to a specific entity, and what is that specific entity? APLC. So, this is a very good typical example for government assistance. Why this example includes almost all the required attributes and characteristics of the government assistance. So, let me take another supporting example. APLC, this is in the apparel industry. This is another industry which is at the verge of collapsing and dying. They are almost breathing their last. The government, having understood the gravity of the industry, decided to come forward and to spearhead their fullest possible support to the garment industry. And the government said, look here, to everyone who is in the government industry, the government is going to give 1000 Juki machines each. So the government conducted a survey and they realized for themselves that there are 200 companies operating within the apparel industry now. So the government is going to support to almost all the entities, all the companies within the industry of 200 companies and to provide 1000 Juki machines each. So let us see whether that also becomes an example for government assistance, and you need to take the definitions and see whether this example fits into the definition. Is it an action by the government? Yes, it is. And is it to provide economic benefits to an entity specifically or range of entities specifically? It is. The aim of this support of the government is not to provide economic benefits to a specific entity, but to a specific range of entities. So there is no issue, and this also can be an example for government assistance. Now, the government identifies another industry which is also at the verge of dying, that is the rubber industry. The government does some investigations and they probe into the matter why the people who are in the rubber industry do not want to continue in their businesses, and what makes them to diversify their businesses into other business ventures. So they identify in the process of manufacturing rubber, what they do is they collect the rubber milk, and to solidify or to get this rubber milk to harden, they need to add some chemicals which is not available now in the country. This chemical is only available in China, and that is also very expensive. So the government is now getting involved in this process to make this required chemical available for the use of the people in the rubber industry at free prices. So no one needs to pay anything to the government, they get the required chemical freely from the government, and that again can be an example for government assistance. Let us see. Is it an action by the government? Yes. It is to provide economic benefits to an entity or to a range of entities? Yes. So that the entities need not to pay to buy the chemicals, they get it freely from the government. It is to a specific entity or to a specific range of entities. It is not just to a specific entity but to a specific range of entities. So that fits well with the definition of government assistance. Now let me give you a bit of a contrasting example. Local milk powder importers recently they decided, all of them, to increase the price of a packet of milk powder from 500 rupees to 700 rupees, and that is almost 20% increase of the prices. And this awoke the government and opened their eyes. The government got involved. The government says, under no circumstances can we let you to increase the price by 20%, and you should continue to provide milk powder to local customers at the same price of 500, and we accept the fact that the rupee depreciates and the taxes keep increasing, and there will be an additional burden on the importers. And just to mitigate your burden to the importers, the government decided to give 200 rupee concessions to all importers of milk powder, so that they can abstain, they can refrain from increasing the price from 500 rupees to 700 rupees. And if you were at the exam, and if the examiner raised that question at the exam from you all guys, what would you write? Would you ever say that this has to be a government assistance or should not be a government assistance? Don't jump to a conclusion all of a sudden emotionally. And that is what the definitions have been given in the standard 4. So you need to take the definitions and to see whether this fits into the definitions of government assistance in LKAS 20. Is it an action by the government? Yes. Is it to provide economic benefits? Yes. Almost everyone who imports milk powders will receive 200 rupees from the government as a concession for every packet of 1 kg milk powder packet. And is it to benefit a specific entity or range of specific entities? That is where the issue is, and that is what you need to question about from yourself. And who is the final beneficiary of this assistance of the government? Who is the final beneficiary? Eventually who will be benefited, and that is why you need to stop at and to think a bit in deep. The final beneficiary will not be the milk powder importers. The final benefit goes not to the importers of milk powders. Whom does the final benefit go to? The final benefit goes to the general public by and large, even including you and I. So if not for the involvement of the government, we would have to pay 700 rupees per one packet of kgs. Now thanks to the involvement of the government, we can still continue to buy the same packet of milk powder at 500 rupees. So now these importers will be acting as a medium through which the government assistance or the government grants or the government supports, whatever the name is, flowing through right up to the final customer. So these importers will be a medium or a mode through which the benefit is flowing to the final customer. So it's not the importers who will be benefited eventually, who will be eventually benefited from the grant or the assistance of the government. It is the final customer who will be eventually benefited. So it's not a government assistance. Why? Because it's not to a specific entity or to a specific range of entities. The economic benefits will be flowing eventually to the final customer, and that is what you need to be careful about. It has to be an action by the government in order to provide economic benefits, and the final benefit of the assistance of the government should flow to a specific entity or to a specific range of entities. So what makes this not a government assistance? Because the final benefit goes not to a specific entity or to a specific range of entities. The final benefit goes to general public by and large. And let me take another similar example. If the government decides to put up an expressway by connecting two major cities of the country, Kotia, Kumbura and Atakalampanne, does that also become an example for government assistance? Now you cannot have a ready-made set of examples for government assistance. You need to set your mind free and your mind should be occupied only by the definitions, and let us apply that to see whether it can be a government assistance. Is it an action by the government? Yes, it is. Is it to provide economic benefits? Yes. Because now if not for this expressway, the transport cost of all the business entities will be extremely high. Now just within 2 hours you can transport all the goods to any ports in the country, irrespective of how far they are, how remote they are. Just within 2 hours they can export all the goods. So the lead time is very low, transport cost is very low, so they can minimize their transport cost and they can increase their profitability. But who will be the final beneficiary? Is it just an identified specific entity? Not at all. Is it just a specifically identified range of entities? Not at all. So everyone in the country will be benefited in some form of, in any form, I mean whatever the form it can be, all the citizens in the country will be benefited from this constructions, expressway, infrastructure facilities will enable all the business people or all the general public in the country to do some savings, and this does not become a government assistance because the final beneficiary of the assistance is not a specifically aimed entity or a specifically aimed range of entities. So I hope the examples are enough and you got the point as to what is meant by government assistance, and then we can proceed to the next item in our discussion, that is government grant, government grants. So let us see how government grants can be distinguished from government assistance. If we look at the definition of government grants are assistance by government in the form of transfers of resources to an entity in return for past or future compliance with certain conditions relating to the operating activities. I just forgot to explain just one small important thing in government assistance, and if you just see the definitions of government assistance, the last criteria or the last requirement for something to be a government assistance, it says economic benefits specific to an entity or range of entities qualifying under certain criteria. And just because you have been supporting to the existing government at their elections, you will not be receiving any assistance from the government. Just because you have been a stooge or a yes man, and just because you try to be popular with the government by supporting their political agenda or whatever, and you will not get anything from the government. Please remember, if you get something from the government, and for that to become government assistance, it has to, I mean the entity has to qualify certain criteria, which I forgot to explain in my previous example. Now the very first example I took was the hotel project. The government is coming forward to give the land. The government might say, look here, we decided to give this land to you all on a conditions, on the requirement of you creating 1000 employments to the people living nearby or within close proximity. Make sure if you do not create as many as 1000 employments or jobs, you need to pay the value of the land back to the government. So the entity promised to create as many as 1000 jobs, employment opportunities to the people not in Colombo, to the people who are living nearby or within the area of Pasikuda, and then only the government will give this land for their hotel project. The second example I took was Juki machines. Every company in apparel industry will receive 1000 Juki machines. The government will say, look, we decided to support you by giving the Juki machines on a conditions, on the requirement of you buying all the materials only from the local suppliers and you can't import anything. Also, none of the products you manufacture can be taken to local market and you must everything export to foreign countries and you must earn only foreign revenue, not the revenue in local currency. So, there are certain criteria. Rubber industry, and the government decided to make the required materials or the chemicals available for the use of the rubber industry on a conditions, on a criteria. What is it? None of the products you manufacture should be taken to local market and everything should be exported, and your revenue should not be in local currency, your revenue should be in foreign currency. So, there are certain criteria to which we need to comply. If not, either the government does not give that support or we need to pay the value of the assistance back to the government, and that is also equally important. So, it has to be an action by the government, it has to provide economic benefits to a specific entity or to a specific range of entities on satisfying certain criteria. So, those are the required attributes for something to be government assistance. Now, we can proceed with government grants, and let us look at the definitions. We have just gone through the definition of government grants, and let me give you some examples and also to tell you how government grants can be distinguished from government assistance. The government grants are assistance by government in the form of transfer of resources, in the form of transfer of resources. This is very important. This is the key term around which the entire meaning of government grant is now revolving. Now, right within every government grant is a government assistance, but right within every government assistance is not a government grant. Let me explain that rigmarole. For something to be a government grant, first and foremost it has to be a government assistance, but every government assistance does not become a government grant. Now, if it is a government assistance which is in form of transfer of resources to an entity, that is what becomes a government grant. And let me put that into a more simplistic language. If the government is coming forward to satisfy or fulfill the materialistic requirements of an entity, that is what can be considered to be a government grant. Basically, that is how you and I should understand this technical definition. To satisfy, to fulfill the materialistic requirements of an entity. Let me take the same set of examples and to recheck whether all the examples I have taken for government assistance themselves can be the government grants as well. So, the very first example was land to a hotel company, and that was a government assistance, wasn't it? And is that government grant in form of transfer of resources to an entity? Yes, it is. It is a government grant. Second example I took was the government providing Juki machines to an entity, and it was a government assistance, wasn't it? And is it a government assistance in form of transfer of resources? Yes, it was. And that becomes a government grant once again. The third example I took was the government providing the required chemicals to the rubber industry. And that was a government assistance, wasn't it? Does it also become a government grant? You can question yourself. Is it a government assistance which is in form of transfer of resources to an entity? Yes, it is. Should be a government grant. Now, let me take a contrasting example. Nowadays, all over the world, almost everyone who is in the tourism industry is severely affected, and they are deep down to the ground, they are right up to the neck, and for a longer period they have been not having a business. Tourism is something which has to be seriously looked at to boost up the business. So, as part of the fiscal policies of the government while providing the required financial assistance, while providing the required infrastructures, also decided to propagate the Sri Lankan tourism industry among the other countries all over the world, just for the purpose of making our tourism industry attractive and captivating to the other countries. So, the government is going to spend lavishly to propagate Sri Lankan tourism industry across the world, and all the companies operating in Sri Lankan tourism industry can save their money because they need not to propagate themselves while the government is doing on their behalf. Is it the government assistance? Yes. Why? Action by the government to provide economic benefits, and it is to a specific range of business entities, and there can be certain criteria. We will forget about the criteria. Now, let us see whether that government assistance become equally a government grant. For that to be a government grant, it has to be a government assistance which is in form of transfer of resources. And it was a government assistance, wasn't it? Yes. Is it in form of transfer of resources? No, there are no resources that are transferred to an entity or a specific range of entities. It becomes a government assistance. It is not a government grant though. I hope it was clear why. It is a government assistance which is not in form of transfer of resources. So, that is what that does not make it a government grant. Another example, let us take the paddy farmers in Sri Lanka. Traditional cultivating methods, conventional cultivating method, traditional crop and conventional methods coming from generation to generations over the decades and centuries. And the government does some researches, and they finally understand that we have a bigger potential, but we are not optimizing and exhausting our full potentials to get the highest possible crop. So, the government, as a result of their research work, conducts as many awareness programs as possible among the rural paddy cultivators, sharing their latest technology and the methods to increase their crop. Now, the traditional paddy cultivators used to get only 2 crops a year. Now, by applying the new technologies which the government is now sharing among those paddy cultivators, we can increase our crop from 2 crops to 4 crops. So, their income will be almost doubled. Can that be a government grant equally? Let us look at whether it can be a government assistance, which in turn let us see whether it can become a government grant as well. Is it an action by the government? Yes. Is it to provide economic benefits? Yes. To a specific entity or to a specific range of entities? To a specific range of entities. We will forget about the criteria. In return, does it become also a government grant? It is a government assistance, but not a government grant though. Why? It is not a government assistance which is in form of transfer of resources. It is just that the government is sharing the technology or the research findings with the paddy cultivators without transferring any resources. Now, it is not a government grant, but it is a government assistance. So, make sure every government assistance does not become a government grant. Also, equally at the same time, please make sure every government grant in return should be a government assistance. So, what makes a government assistance a government grant? It has to be a government assistance which is in form of transfer of resources to the final specific entity or range of entities. So, that is how you distinguish government assistance from the government grant. So, that understanding is absolutely important in moving forward. So, since we know what government grants are and what government assistance are, as I said at the outset, no accounting is required for government assistance. It is just that we need to disclose, and let us see what the disclosures are for government assistance later. So, what requires the accounting is the government grants, and let us start discussing the accounting for government grants now. As I said in my initial overview of LKAS 20, grants are basically taken into two categories. Asset related government grants and income related government grants. We will see the definitions, why the standard has defined those two as well. Government grants relating to assets, grants related to assets are government grants whose primary condition is that an entity qualifying for them should purchase, construct or otherwise acquire long-term assets. Subsidiary conditions may also be attached, restricting the type or locations of the assets of the periods during which they are to be acquired or held. Right. Now, for government assistance, there are certain criteria. For the government assistance to be a government grant, there is a condition. So, the criteria and the condition should not be mixed up. If you do it, the entire accounting will be messed up. Now, government grants relating to assets, so asset related government grants are the grants whose primary condition is either purchasing long term assets or constructing long term assets, and that is the condition attached to the grant. Now, say for an example, if the government decides to offer 100 million rupees in cash to an entity, and what is the condition? The government says you can't use this 100 million rupees for any other purpose but to purchase your manufacturing plants. That has to be asset related government grant. Why? The condition attached to the grant is requiring the entity to purchase manufacturing plants, and that has to be asset related government grant. Now, LKAS 20 gives you two approaches to do the accounting to recognize asset related government grants, the first is the capital approach. Second is the revenue approach. Having said that, nowhere does the standard specify a particular superior or preferable method. Nowhere does it say that capital approach is preferable or superior to revenue approach, and nowhere does it rank or rate a particular method in particular, and it is up to you all to decide the method that you think is more appropriate for you all guys depending on the nature of the assets or the other criteria. And I said at the beginning, the capital approach, the purpose or the aim of the capital approach is to recognize the government grant outside the profit and loss. We do not want the government grant to be in profit and loss, we want that to be outside the profit and loss. The purpose or the aim of adopting the revenue approach is the other way, and we want the government grant to be right within the profit and loss. Why? We will explain the reasons. Now, the capital approach can be compared with the revenue approach, and you can find out some points in favor of the capital approach. I mean, the people who prefer the capital approach have some points for themselves, and they have some points to say that the capital approach is preferable to revenue approach, and this is the reason. So, this is what that makes us choose or select capital approach without selecting the other method. Or the people who favor the revenue approach have their own views to favor their choice of the revenue approach. They might say, look, these are the reasons why we decided to select or decided to choose revenue approach, and let me explain one by one. Capital approach, simply the accounting is here to recognize the related assets. So, we will recognize the related asset account is debited. I am not explaining the entire accounting right now, just to give you the simple double entry, and you can credit to a reserve. It does not go to other comprehensive income, straight away that goes to equity. Simply the value of the government grant you received is recognized into a reserve, and that goes straight to equity of the business. Here you can debit to asset account and you credit to profit and loss. Not that do we credit to profit and loss at once, maybe we first credit that to a deferred revenue account or some other methods are there, and the balance in the deferred revenue account will be released to profit and loss in bits and pieces over a prolonged period on certain criteria. Let us look at what it is as we get there. Now, simply what I want you to understand here is the fact that the value of the grant goes to a reserve account here, and that is shown under equity. Here the value of the grant goes to profit and loss, and that is included in the profit and loss either in full or in bits and pieces over a prolonged period. And let me explain the reasons why capital approach can be superior, preferable to revenue approach and vice versa. Lot of reasons can be there, but let me just give you one or two reasons, and that is not that important from the examiner's viewpoint, but it is important for your understanding. Capital approach, you debit to asset account and credit to reserve account. Now, you know, the balance sheet of an entity is a fantastic arrangement and an array of your items of assets and liabilities. It is a methodical and that is a scientifically developed arrangement of assets and liabilities of your business and that is fantastic arrangements like the English alphabet. Even English alphabet is a fantastic arrangement of letters, but whoever who made it has made a blunder by keeping U away from I. But the balance sheet is not like that. It is a fantastic arrangement which is scientifically developed to arrange your assets and liabilities and equity, and let me explain why. Say you wanted to buy inventories for a value of 5 million rupees and you are running short of money. Instantaneously you decided to go to a bank and applied for a bank OD of 5 million rupees, and the bank has approved the bank OD and sanctioned immediately. So, your bank OD will be shown under liabilities and your inventories will be shown under assets, and that will be under current assets, and the bank OD will be under current liabilities. And just in few months time you wanted another 500 million rupees, just because you start smiling with the bank manager by exposing and showing all your uneven yellow color big tail, it does not mean that the bank will approve and sanction the bank loan. The bank will be asking lot of documents, forecast, the budgets, the profit and loss, the audited accounts and so on and so forth. It is like you getting through a mini MBA. Now, the bank knows why you are asking 500 million rupees facilities, not to just buy inventories and to buy long term assets. Say non-current assets, we are buying property, plant and equipment for a value of 500 million rupees. The bank says by granting the bank OD, you need to settle the bank OD just in 3 months time, and we purchase inventories, we can sell them within 3 months time, and patas we can settle the bank OD. But the bank never said and wanted us to settle the bank loan of 500 million rupees just in 3 months time, and the bank knows that is not possible. So, the bank has given us 20 years to settle this long term bank loan. So, we can drag the payment over 20 years time, because for us to generate 500 million rupees, that will take a longer time, like 20 years time. So, the bank loan of 500 million rupees never comes under current liabilities, that comes under non-current liabilities. Similarly, the assets you purchased for 500 million rupees does not come under current assets, that goes under non-current assets, and we want another 600 million rupees worth of assets, and for that we have share capital of 600 million rupees. What am I talking about now? These are the resources in your business that will contribute to generate future cash flows. And how did you finance the purchase of inventories from the bank OD? How did you finance the purchase of 500 million worth of non-current assets? That is from the long-term bank loan. How did you finance the purchase of the 600 million worth of property, plant and equipment? That is from the share capital. So, these are the economic resources of the entity, and these are the financing tools, financing techniques and financing devices used to finance those assets. So, that is what I said, balance sheet is a fantastic arrangement of the economic resources, the assets in the business, and related, connected financing techniques and financing devices used to finance to purchase those assets. Come on, what a nice presentation. Balance sheet. Just imagine, as part of the fiscal policies of the government is now spearheading to support to as many business people as possible. Even we were one among those who were supported by the government, and the government has given us 100 million worth of assets cut free, nothing was charged, absolutely nothing. And if you decide to credit this 100 million to profit and loss under revenue approach, this particular relationship will be broken. What is the relationship? we are showing the assets along with their related financing techniques, except for one asset received from the government, and we got it, we have that asset. How this asset was financed in acquiring is not shown anywhere, and that is not as good as you presenting that as a reserve. If you show that value as a reserve and we maintain that relationship of showing the assets in the balance sheets along with their connected financing techniques, this is from the bank loan, this is from the share capital, this is from the government, and this is from the bank OD. So, the assets are shown and the connected financing techniques and devices are shown. So, that is one reason why the people who favor the capital approach has decided that the capital approach is preferable to revenue approach. So, that is one positive reason that makes some people choose capital approach over revenue approach. I hope it was clear. Second one, say my business earned a revenue of 100 million rupees. In earning that 100 million rupee revenue, I have incurred a cost of 40 million rupees, and my operations has earned me a profit of 60 million rupees. Now, in the midst of this operating revenue, I will bring another 100 million rupees which I got from the government as a support into my profit and loss, and then my profit figure rises from 60 million rupees to 160 million rupees. Somebody who will glance through my profit and loss will realize the fact that I have earned 160 million rupees from my operations. And this decision to include the government grant into profit and loss under revenue approach will distort your operating results assessment. And if you earn 500,000 rupees income a month and if your expenses will be 200, so you can save 300 rupees, 300,000 rupees, and that is your strength of your earning potential. But other than that, if you have relations living all over the world and they are extremely exceptionally rich and they have started remitting you say 100,000 rupees a month, 200,000 rupees more than your income, your charities, your donations are much more bigger and your bank balance can be big, but that is not your strength, that is not your energy. That is like you depending on someone else, and that is not what you should do, because you should be able to earn for yourself without you expecting someone to come and to hold your hand and legs for you to stand on your own. You should be able to stand on your own without we expecting someone else to come and start feeding us. So now, someone who wants to assess my performance will not be able to assess it right, because I have included not only my operating income, also non-operating item, so that will distort my financial performances. So we should not let this to be in the profit and loss, bring it elsewhere under a reserve, so that non-operating items are segregated from operating items, and I will keep only operating revenue and expenses in the profit and loss in a way that we can assess our operating strength right. That is one reason why capital approach can be considered to be preferable and superior to revenue approach, because it does not let me to keep it in the profit and loss, so that operating items will be filtered and we assess our operating strength and the potential, and that government grant, which is like a charity from the government to us, or it's like a donation a compliment from the government to us is taken elsewhere. The other reason, if the government decides to give you, or if the government gives you 100 million rupees in cash as a grant, will the owners of the business ever think to make use of that 100 million rupees to pay to the employees as the bonus? That never happens. Or by receiving or having received that 100 million rupees, will the owners of the business ever decide to give it back to someone on charity? That never happens. Having received that 100 million rupees, the owners will be happier because it's the owners who will be eventually benefited from this government grant, not anyone else. So, whose ownership goes up? The owner's ownership in the business goes up by 100 million rupees. So, why don't you bring that to reserve or equity, because that will make the equity of the business bigger without bringing that to profit and loss. Might as well to bring it to equity. Why? That government grant of 100 million rupees will make the equity figure bigger, not your operating profits. So, those are the reasons, some valid reasons why some people favor the capital approach over the revenue approach. Then the other one, revenue approach. There are reasons why some people prefer revenue approach over the capital approach, and let me explain some points, but it's not the exhaustive and you need not to remember, you need not to by heart why it's in the standard book. And if for some reasons by a mistake, if the examiner is asking some questions on this, you can straight away copy them. A revenue approach. What is the purpose, aim of the revenue approach? To bring this grant to profit and loss. Now, say grant is in the profit and loss. How does the government get money to give us grant? Where does the government get money from to give us grants? How does the government make money? The government gets money to give us grants is not from any other methods, but they are collecting the taxes from us. And remember, the grant is nothing but the refund or the repayment of taxes by us to the government back to us. The taxes that the government receives from us will be paid us back in form of a grant. I hope it was clear. Then if you pay taxes to the government, where are we showing the taxes in the financial statements? Is it in equity? No. The taxes you pay to the government are shown in the profit and loss. And if the same taxes you paid to the government will be received back by you in a different name and a different form, and what is the name now given? It's not the repayment of taxes, we call it the grant now. If the payment is in the profit and loss, if you receive it back from the government, why the hell are you taking it elsewhere? But it should be taken to profit and loss. That is one reason why some people favor capital approach, because you pay taxes, then it comes to profit and loss. If you get it back from the government once again, so why do you take it elsewhere? That is one reason. Another one. I said, for you to become eligible for the grant, there are certain criteria or there are conditions for that to be a grant. You should be able to comply with the conditions of the government, if not you are not receiving the grant. Let me take an example. The hotel project, the very first example I took, it's 500 million rupee land. The government is asking you to create as many as 1000 jobs opportunities to the people who are living nearby, and including the gate watchman, including the chefs, including the room boys, including the general manager, including the stewards, everyone, including everyone, it's not 1,000 employments, it's not 1,000 job opportunities, we can create only 900, but just for the purpose of convincing the government to give us the grant, we had to create another 100,000 job opportunities. Now, creating 1,000 job opportunities is the conditions that will make us qualify for the grant, and the cost of meeting the conditions, the cost of satisfying the government conditions will be in the profit and loss. The employment benefits, the employment cost will be in the profit and loss. In other words, to become eligible for the grant, you need to incur a cost, and that cost is in the profit and loss, and the receipt of the grant is just like a receipt of something to mitigate the cost incurred. So, if the cost is in the profit and loss, the resulting revenue, which is the grant, should not be anywhere else, that also has to be in the profit and loss itself. So, those are the valid arguments that some people claim that revenue approach is superior and preferable to capital approach. So, once again I must emphasize the fact that the standard never recommends any particular method, nowhere does it say a particular method is superior or better or preferable. It is up to you all to decide the particular method based on your asset nature and the given circumstances. So, let us look at the accounting part in full now. Under capital approach, simply you will debit asset account, whatever the asset, it can be a land that is given by the government, you simply debit to asset account, land account, and under capital approach, where does the credit go? You credit to a reserve account. You credit to a reserve account, debit to asset and credit to reserve. That is the simple accounting requirement under capital approach. The accounting is as simple as that. You recognize the asset, on the other hand you recognize the reserves, that is nothing more than that. Wow, very simple accounting. Then let me take you through the accounting under revenue approach. Revenue approach. So, we have two methods under revenue approach. Either you can recognize into a deferred revenue account first, or you can recognize the grant as a deduction, from the cost of the asset. And I must tell you something, this is not kind of an accounting, this is like a way of presenting them in the balance sheet. Now, say for an example, if the asset value is 1 million rupees, and if the government has given the full amount of asset value in cash, then asset value is 1 million rupees and the government has given us the entire 1 million rupees. If you recognize the grant as a deduction from the cost of the asset will get shown in the balance sheet at zero value, and that is something which is very artificial. So, there are some fictitious, I mean not fictitious, it is a genuine asset, but it does not get reflected from the balance sheet. what you will do is, you show the asset of 1 million rupees and there will be a correspondent credit elsewhere in another account, and this credit balance of the grant will be shown as a deduction from the asset value 1 million rupees. Asset will be shown, grant will be a separate credit, and that will be shown in the balance sheet as a deduction from the asset value. If not, we are not going to deduct it straight from the asset value, so that the asset value becomes 0. That is not the practice, and this should be the practice. Now, coming back to this, I will explain that in detail with example illustrations. Deferred revenue. Say you buy an asset at 5 million rupees. So, you can debit to asset account by 5 million and you credit to deferred revenue. Deferred revenue. Deferred revenue is 5 million rupees. Not that do we bring this 5 million rupees straight to the profit and loss right during the year during which we received the grant. Temporarily, this grant is taken to a temporary account called deferred revenue, and the balance of 5 million rupees need to be released to profit and loss on a particular systematic method. And what is the systematic method we should adopt? It is very simple. LKAS 20 proposes that this 5 million, whatever the value of the grant, should be released to profit and loss in bits and pieces over a particular period. What is the period? That should be the period the entity expects to generate economic benefit from the asset to which the grant was received. The value of the grant lying in the deferred revenue account should be released to profit and loss using a method which is consistent to the method of the entity consuming economic benefits from the assets. So, there are two things to be looked at. What are these two things? You need to look at the period, and also you need to look at the method. What is the period during which the deferred revenue balance should be released to profit and loss? The period during which the entity expects to generate economic benefit from the asset. What is the method? The method in which the deferred revenue should be released to profit and loss should be consistent to the method in which the entity expects to consume the economic benefits of the asset. If I further simplify, the balance in the deferred revenue account should be released to profit and loss over the useful lifetime of the asset to which the grant was received, and this has to be released. This means the balance in the deferred revenue account has to be released to profit and loss using a method which is similar to the depreciation method of the asset. And if the entity decides for some reason or other to depreciate this asset over 10 years time using straight line method, and that should be the exact method in which deferred revenue should be released to profit and loss. Why these two things are like interconnected? You cannot apply two different methods and two different periods, and the periods and the method should be consistent to each other. So, let me take a simple example to illustrate, and with the presentations in the financial statements. Asset value is 5 million rupees. The grant from the government is just 3 million rupees, not the full value. It is just 60% of the asset value, and the asset is now depreciated over 5 years on straight line method. Straight line method. At the exam, the examiner will request you to prepare the extracts of the financial statements end of the first year. Let me prepare the profit and loss extract first. Profit and loss extract. Now, the asset value 5 million rupees, which you start depreciating over 5 years on straight line method. So, annual depreciation should be 1 million rupees. That is a deduction from the current year's profit. And government grant should be an income. Let us see what the amount should be. 3 million rupees has to be recognized to profit and loss over 5 years, and how much should be the amount of grant to the first year's profit and loss? That has to be 600,000 rupees. So, this is how the profit and loss statements looks. And then we will go to the balance sheet presentation, statement of financial position. Asset will be shown under non-current assets, say property, plant and equipment. Asset value was 5 million rupees, the cost was 5 million, that is depending on the accounting method adopted for the subsequent measurements, it was the cost model. Minus cumulative depreciations end of the first year, cumulative depreciation figure is 1 million, deducted and then written down value becomes 4 million rupees. And the deferred revenue account we opened up had a balance of 3 million rupees in the credit side, out of which we had drawn 600,000 rupees, and that was there in the profit and loss. So, the balance in the deferred revenue account is 2.4. So, where are we going to show this 2.4 million rupees? Out of 2.4 million, this 2.4 million is the balance which has to be recognized to profit and loss over the remaining 4 years ahead. Out of 2.4 million rupees, another 600,000 need to be released to profit and loss immediately within the next year, and that 600,000 which is due to be recognized to profit and loss in the next year should be recognized to balance sheet under current liabilities, say deferred revenue. Further, there will be another balance left of 1.8 million rupees, and that is the amount of deferred revenue to be recognized to profit and loss during the period beyond the next year. So, that 1.8 has to be recognized to the balance sheet under non-current liabilities, deferred revenue. So, this is how the balance sheet looks. So, it is not so hard, it is not so complicated. The second method under revenue approach, let me take the same example. Asset value is rupees 5 million, grant is 3 million rupees. Depreciation is over 5 years on straight line method. Here what happens is, without you bringing the grant to a deferred revenue, you show it in the balance sheet as a deduction from the asset value. Now, asset is debited by 5 million rupees, the grant is credited to a separate account, say 3 million rupees. But remember, as you depreciate the asset, now the asset value has to be the net of the grant. Asset value should not be the gross value of 5 million rupees. Actual asset value is considered to be the value which is net of the grant. So, the value to be depreciated should not be 5 million rupees. The value to be depreciated should be 3 million rupees. If you depreciate the asset, the annual depreciation here should be 600,000. I made a mistake, should be 400,000. So, this is the net effect of the previous deferred revenue method, and this is like you recognizing depreciation based on the original cost of 5 million rupees and recognizing 600,000 grant and netting them off in the profit and loss. So, without you showing depreciation based on the original cost of 5 million rupees and then recognizing 600,000 rupees grant, you have netted them off and shown the net amount of 400,000 rupees. Here, how do we recognize the grant? The grant is recognized to profit and loss in form of reduced depreciation. In deferred revenue method, the depreciation figure is 1 million rupees. Now, the depreciation figure is 400,000. Depreciation figure has got reduced by 600,000. That is like you recognize in the grant. Here, the grant gets recognized to profit and loss in form of reduced depreciation to profit and loss. And let us see the presentations in the balance sheet. Asset value 5 million minus the grant 3 million, asset value 2 million minus cumulative depreciation of 400,000, written down value of the asset should be 1.6 million. Written down value of the asset should be 1.6 million rupees. So, that is how you do it. When you decide to recognize the government grant using the second method under revenue approach, that is where you show the grant as a deduction from the asset value. Now, what about you receiving a grant for a non-depreciable asset? What does it say? In my previous example, we received 3 million rupee grant for a depreciable asset which had a value of 5 million rupees. Then under under revenue approach, or especially under deferred revenue method, we used to recognize the grant first into deferred revenue and you start releasing that to profit and loss later subsequently over the depreciation period or over the useful lifetime of the asset, and using a method which is consistent to the depreciation method of the asset. So, you recognize deferred revenue to profit and loss over the lifetime of the asset and using a method which is similar to the depreciation method of the asset. What about you receiving a grant for a non-depreciable asset? Then how will you release the grant to profit and loss, and what is the method to be chosen. So, what should be the period over which the grant has to be released to profit and loss in case the grant has been for an asset which is not depreciable. Now, we buy a land 500 million rupees and the government is granting us 300 million rupees. Land is not depreciated. So, how will you decide the period and the method of recognizing the deferred revenue to profit and loss? It is not a $1 million question. Why? The guidance is given by LKAS 20. If the asset is not depreciable, you need to see the period over which the economic benefits from the purpose for which the land was used will generate economic benefits to the business. What I am saying is this: now if the land is not depreciable, we are using the land to construct a building and the building has a lifetime of 50 years. Now, in simple terms, without you looking at indefinite lifetime of the asset, you can think of 50 years lifetime, and that was the lifetime of the purpose for which the land has been used. So, you will start releasing deferred revenue balance to profit and loss over 50 years lifetime, which is the lifetime of the building, and you can release deferred revenue balance to profit and loss over the period during which the building on the land is depreciated. So, if it is 50 years, you will depreciate the building over 50 years, you will release the deferred revenue to profit and loss over 50 years, and if it is straight line depreciation method of the building, and so should be the method of releasing the balance of deferred revenue to profit and loss. So, that is how it has to be fixed. Now, everything I explain should be government grants for which there are certain conditions attached. Or criteria in government assistance. Before it being a government grant, it has to be a government assistance. In government assistance, there are criteria. In government grants, there are conditions. Now, these conditions to be fulfilled in the future, not in the past. In other words, the entity was required to create 1000 employments in the future. And other conditions, you need to create or you need to generate 500,000 US$ foreign revenue, future conditions. Or you need to make sure that in the future when you buy materials, no one can ever buy materials from the foreign suppliers. Make sure all the suppliers whom you buy the materials from should be the local suppliers. They all are the conditions relating to futures. But sometimes the government will decide to do a grant or to give financial support or a grant as a result of complying with the conditions in the past or without requiring any conditions. Unconditionally, the government will give you a grant. Or if the government is giving you a grant as a result of you complying and satisfying conditions in the past already done, and that is what the grant is given for now, then how will you recognize deferred revenue to profit and loss subsequently? Then you need not to bring it to deferred revenue, which is to be released to profit and loss subsequently. If the government is giving you the grant as a result of you complying with the past conditions, or without requiring any conditions, you bring the total amount of the grant to profit and loss, and that need not to be taken to deferred revenue first and then that to be released to profit and loss in bits and pieces over a period. If it is for complying with the conditions in the past, you should bring the entire amount of grant to profit and loss straight without bringing that to deferred revenue first and then that being amortize it to profit and loss over a period. So, I hope everything was clear. Sometimes the government grant recognition can result in you recognizing contingent liabilities. Contingent liabilities. So, where do we talk about contingent liabilities at? It is not in LKAS 20, it is in LKAS 37. And let me give you a simple example. The grant given to us is 50 million rupees. And there are conditions attached to the grant. What is the condition? The government says you need to maintain, or you not only should create 500 employments, so you should maintain that over 5 years time. At the beginning, when the grant was given, we were successful enough in creating 500 job opportunities. That alone is not enough, and the government wants us to maintain that over 5 years time, over 5 years. First year end, second year end, third year end, fourth year end and the fifth year end. And then we decided to recognize this 50 million government grant by 1/5 of the grant to every year, so that we recognize 10 million rupees to profit and loss every year. The government says if the number of employees falls below this minimum norm of 500 in a particular year, 1/5 of the grant should be paid back to the government. Now, we are supposed to maintain this number of employments over 5 years time. In any case, the number falls below 500. What number? The number of employees falls below 500, then 1/5 or the amount of grant which is attributable to that year in which the number of employees fell below 500 should be paid back to the government. Now, at the beginning, at the outset, we had 500 employees and we maintained that over the first year. Out of 50 million grant, 10 million can be recognized to profit and loss, no problem. So, what is the balance grant remaining? 40 million rupees. The balance 40 million should be recognized to profit and loss over another remaining 4 years time, but whether you can recognize it to profit and loss or whether you should pay it back to the government depends on whether we should be able to maintain the number of employees of 500 over the remaining 4 years time. If you can maintain above 500, you can recognize it as an income to profit and loss. If it falls below 500, you cannot bring it to profit and loss, you need to pay it back to the government. So, whether you should pay it back to the government or not depends on whether we will be able to maintain 500 people, employees in the company or not. So, this is like a contingent liability. It is a liability of which ultimate outcome will be confirmed only on the occurrence or non-occurrence of one or more future events. So, now for this contingent liability of 40 million rupees, what should apply is not LKAS 20, it has to be LKAS 37. And in the second year, for some reason or other, the number of employees fell below 500, So, we are not entitled to 10 million of the grant to be recognized to profit and loss, and you are under the obligations to pay it back to the government. So, 10 million rupees has to be a liability now, it is not a contingent now. For the second year, for not being able to maintain 500 employees, you should pay it back to the government, and the balance 30 million can further be a contingent liability. So, that is how it works. You need to also get involved LKAS 37 for the recognition of the contingent liability.